Well, yesterday's question about Bitcoin going to $100,000 certainly sparked a lot of people commenting and voting. A normal one of my daily financial news might get 100 comments or so. Yesterday is already approaching 300. So, given the interest in that question, I thought I would share with you the results. As of this morning, I've gone back and looked at the comments and done a casual computation. It appears that 85% of folks believe that Bitcoin, BTC, will be over $100,000 by the end of the year. I think yesterday when I asked this question, it was at 88,000 or so. As of this morning, right now, you can see that number, 92,055. So again, you know anything about Bitcoin and really crypto in general, it usually goes on runs. And right now, the 85% of you that said yes, Bitcoin will go to $100,000 in 2024 or by the end of 2024. I like your chances. So again, very, very interesting. I think there's a lot of things going on in that world that are interesting. Again, I think there is more, wealthy folks that will be moving a single-digit percentage of their net worth, much like Olivia and I did in 2018, right? We consider it an insurance policy. I think there is more and more talk about folks looking at it as a kind of a protected asset in the new administration. So I don't know. Seems like the wind is at the back of those investors. Again, as it should be highlighted, this is one coin we are talking about. We are not talking about the altcoins or the meme coins or the pump and dumps and all of that nonsense. Hopefully we have learned from our mistakes. We aren't chasing meme coins. We are looking at the gold and silver, if you will, of the crypto markets, which I believe are often called Bitcoin and Ethereum. So again, yesterday's question about Bitcoin going to 100K clearly got the comments going. So again, about 85%, which I will admit, higher than I expected, of folks think it'll go to 100 grand, but there you go. We got to talk about inflation. We got a lot of stuff to go through today. We got the CPI print. We got the numbers behind the numbers. We have talk tracks that are already merging, but let's get into it. So again, headline last month was 2.4. Core was 3.3. Again, those were last month. Expectations. It's funny how expectations have changed. Over the weekend, Market Watch had expectations at 2.5, 2.5, so up slightly. Apparently, yesterday, that changed, and expectations were now 2.6. I did not see that. I usually don't review the numbers the day before. But yes, that is why you are hearing a lot of people say headline inflation hit the number. I don't know. I don't know. Come on. Headline inflation is now up, right? It's 2.6. It was 2.4. The trend is not your friend. Again, as we've talked about ad nauseum with Dan Bird, we talk about it at least once a month. The base effect is really one of the big kickers, why we both said it would go up. And, it came in at 2.6. I think more concerning is core. I don't know if you've checked, but core seems to be anchored at 3.3%. All right, let's go deeper in the numbers. Those are obviously headline numbers. Again, I think it's worth repeating or worth highlighting that with inflation up, let me just get the latest number since I have my phone with me. It looks like the bond market is taking it in stride. I checked. Yep, bond market down ever so slightly, about break even actually. When I checked this morning, the 10-year note was the rate for the 10-year note was down. It's now basically flat. But again, it's not ripping higher. So the market was oriented to a higher print. Now let's go behind the numbers. I don't know about you, but this is getting tiresome. As somebody who's been talking about the miscalculation or misrepresentation or the old way or the bad model for shelter, we once again get an example of that. Shelter inflation. has been reported at 4.9%. It is up month on month 0.4. Last month, it was up 0.2. So it appears that shelter inflation is increasing. Now, let's be honest. You and I have talked to plenty of investors. Many of them show up on this channel. Does anybody think rental rates are truly increasing 5%? No, of course not. In fact, we have talked to people with big data piles. And generally speaking, rent is falling, aka shelter. So once again, if you correct for the error or at least out of date calculation for shelter, inflation falls by more than 50%, aka the print at 2.6, 3.3, more than 50% of that number is shelter inflation. So again, if you cut those numbers in half, what do you get? You get 1.3 and you get 1.65. Again, both numbers obviously being below Fed target. So what is the Fed saying? Actually, before we go to shelter, let's hit some other numbers since I bothered to capture them. Energy, right? Oil, gas, the like, down 4.9%. Food up 2.1%. These are all year-on-year numbers. Car insurance did fall ever so slightly for the month, but is still up 14% year-on-year. So again, insurance is a big problem. So what are the Fed saying? Well, we got Neel Kashkari out saying inflation is heading in the right direction. Now, I remind you, inflation just went up, but yet Neel says inflation is heading in the right direction to 2%. Now, how can he say that? It's because he knows that the shelter inflation is wrong, is broken, is out of date. They know that. It's like they have an ace up their sleeve. They know that eventually this shelter inflation is going to correct itself. And then frankly, if they don't change the model, be reporting an ultra low number for quite a while. It's just a bad number. It's just, we have the power. We no longer have to calculate shelter that way. We've got apartments.com and all of these other platforms that capture real-time information. It wouldn't take a, Manhattan project to redo the models for shelter. Pretty discouraging, frankly. Also, Neel Kashkari out saying the U.S. economy surprised him. Oh, that got my attention. What surprised him? He said that he thought if the Fed raised 500 basis points as quickly as they did, that the economy would have slammed on the brakes. So again, the U.S. economy is maybe more robust, more flexible, maybe has the ability to, move around more than Neel Kashkari said. And only the last thing, folks, this one, I don't know. This one surprised me. It surprised me. The only thing that could cause Neel to rethink a December rate cut is a surprise upside in inflation. Now, I remind you, inflation went up to 2.6 from 2.4, but it wasn't a surprise. It was expected. So again, it looks like, at least in Neel's mind, we are going to get another rate cut in December, which will be a total of 100 basis points. Folks, yesterday in the Daily Financial News, I highlighted that we were going to get some gifts, some more value from Jason Pritchard. Jason Pritchard is, again, somebody I put on my personal Mount Rushmore of real estate investors. He once again over-delivered, as he so often does. He talked about getting us 2 videos for school. He actually gave us 3. So if you are a school member and you want to watch those videos, they are now uploaded on School. You just go to the classroom section. You scroll to the bottom. You will see a thumbnail of Jason and his lovely wife, Jen, or Jennifer, as the thumbnail. What you're going to find in those is you are going to see a full breakdown of his business, right? The wholesaling, real estate flips, all of that. He's going to break down his entire business for you in a video. Next, he's going to talk about the secret or the power of raising private money. And then finally, He's giving you a true gift. He has given you a recorded live seller call. So again, you could see what one of those looks like. So again, if you are a part of school, they are there. They are available. Go listen. You will enjoy them. Again, he's on my Mount Rushmore of real estate investors. So I hopefully you go check those out. And Jason, if you watch this, thank you for giving that to the school community. Since we're talking about school, let's mention two more things. One, Benjamin. Benjamin joined yesterday. Benjamin, thank you so much. Do remember that in order to unlock Jason Pritchard's videos, you do got to get to level 2. It's ridiculously easy. Just introduce yourself, read a few posts, comments. You will unlock not only Jason, but Ty's 6-hour masterclass on creative financing. And if you care to get a 10-week boot camp that was $1,000, you need to get to level 3. And then shout out to the ladies of ORAT. Yes, the ladies of ORAT are doing big things. They've scheduled their first Zoom for November 13th at 8 a.m. So in about 19 minutes, the ladies of ORAT will have their first kickoff in Zoom call, which I am so happy to see. Let's talk about something that I found on Twitter. I want to give a shout out to the creator, the Mojo Mindset. The Mojo Mindset is someone who's been on the channel a couple of times. He summarized a video of talking about millionaires. The conversation was between Lewis Howes and George Kamal. These are the 5 takeaways for how people become millionaires. Number 1, they live on less than they make. Again, folks, if I've made anything clear to you, hopefully you understand my personal 3-step process to getting wealthy is you have to have discretionary income, disposable income. You have to have money left over that can become those initial seeds of seed capital that can buy assets. So number 1, nailed it. Number 2, kind of in the same light, but ever so powerful in the twist, delayed gratification. This is something that I was frankly very bad at for 3 decades. I've shared the story with you of being, getting my first quote unquote full-time job, becoming an accountant after getting my 4-year degree with student debt. Yes, with student debt. And I went out and bought a stupid car. Bought a car that was more than my income. But hey, financed it. Good to go. Delayed gratification is important. Again, this process, as I tell you all the time, in getting wealthy is a 10-year journey. It just is. I'm sorry. It's a 10-year journey. Number 3, this is something, again, I got wrong until very recently. They drive average 4-year-old used cars. Cars are expensive. They depreciate quickly. Again, millionaires are comfortable driving old used cars. Number 4, this one's important. This is why I try to motivate you to believe in yourself. 97% of millionaires believe they control their own destiny. And I got to tell you, there's a lot of people I interact with that think there's this outside force and they have no control, right? It just, life happens to them instead of them making life happen. You have to believe it's possible. You have to believe in the 3 steps. Step 1, discretionary income. Step 2, become elite. Step 3, do it for a decade. You've got to believe that you have control. You have to take extreme ownership. It's just no other way, in my opinion. And number 5, they make a plan. They get on a budget. Again, these are summaries from the Mojo Mindset. Shout out to he and his lovely wife. I appreciate that summary. Wanted to share it with you. Want to shout out Claudia Som. Good news, folks. Claudia Som and I are currently actively trying to get her rescheduled on the channel. That was a wonderful video helping us understand economy from a world-renowned economist. I think she's amazing. Claudia Som put out a post on Twitter or X that says, "We do not have an inflation problem now. We have a housing problem." And oh, by the way, we've had a housing problem for a year. This is really Claudia Som's point that, hey, folks, let's look at shelter. Again, in my opinion, not hers, my opinion, there's a calculation or model error, which, oh, by the way, I replied to her text or her post, so we'll see if she agrees or disagrees. But again, a lot of the inflation, over 50% of the inflation in today's prints was shelter inflation. So again, Lots and lots of stuff going on. Lastly, want to shout out John Burns Real Estate Consulting. Love John Burns. They put out a lot of great stuff. They did a summary of LGI Homes earning call. Again, LGI Homes is a home builder. First thing to point out is they saw a slowdown in October. Folks, it's become painfully clear that our call of a bubble or a pause, an air pocket, whatever you want, before the election is real. Lots of things, cars, homes, everybody was on pause in October. They expect it was a near-term dynamic, aka election, not a new trend. I don't know. We're going to find out because it's really interesting. I don't know if you guys are seeing this, but I've gotten, let me be accurate, probably 10, maybe 15 notes, either text, IG messages, maybe some on X, about activity picking up post-election results. Some people had properties listed, no activity, and boom, 2 offers. Some people had other properties out and they got offers. So again, it'll be interesting to see as the data rolls forward what happens. And then lastly, LGI Homes, challenge is at the entry level. No kidding. This is what I talked about at Resi Day. Again, shout out Lance Lambert in New York City last week. We need to build smaller entry-level housing. Anything we could do to encourage that, any legislation, whatever, to build more entry-level housing would be a good idea. And then finally, this got me surprised. Again, it's Wednesday, so we get a lot of mortgage data. Purchase applications were up 2% week on week. Thought that was interesting. It is also up 1% year on year. And then mortgage apps in total, which includes refis, was up a 0.5%. But last week we were down 10.8%. So again, lots of stuff going on. Folks, you're amazing. I appreciate you being here. Like, subscribe, comment, join school. And don't forget, we are 90 days away from our Vegas event. Lots of you have told me you are coming. It's time to buy your tickets. General admission VIP. It is going to be a blast. We've talked about who's coming. I've kept a few surprises intact just so you're not just so you have something to look forward to. So hopefully we'll see you in Vegas. You can find the event on Eventbrite, or you can go to school. Just go to school.com and search One Rental at a Time. All right, folks, take care. Be amazing. Later.